we should be thankful for Satoshi Nakamoto for all sorts of reasons. One of the more impressive, in my opinion, is how Satoshi launched Bitcoin. I'll say it that way. In that Satoshi Nakamoto did not take Bitcoin to Goldman Sachs to take it public. Satoshi Nakamoto did not list it on the New York Stock Exchange. Satoshi Nakamoto didn't put it on Product Hunt. Put it on an email list and just leaked it. And for that reason, Bitcoin is owned by all of us, by the people.
We're diving into some explosive revelations straight from Bitcoin Amsterdam 2024. Jack Mallers and Dylan Leclerc took the stage to talk about Bitcoin adoption on a global scale, from El Salvador's bold move as a pioneer to the intriguing possibility of US involvement. The way Bitcoin is shaking things up isn't just local. It's a worldwide shift challenging traditional payment systems, disrupting corporate finance, and redefining what we know as money itself.
So over half of the gold supply is owned by governments and central banks. I think governments own only 4% of the Bitcoin supply. You've got Michael Saylor, who's borrowing as much money as a human being could possibly borrow. This guy's got billions of dollars of debt, and he's trying to own as much Bitcoin as he can, and he's barely eclipsed only 1%. And so the mere fact that Bitcoin is not concentrated, if Satoshi said, hey, Goldman Sachs, I created a really interesting money, I want you guys to help me take it public, we'd probably have a more concentrated supply. It's the fact that you can custody it in your brain, it's weightless, there's no cost to store and hold it, it's global, and the distribution was through mining, through energy, and through leaking it on a mailing list. There is no threat. I mean, Larry Fink can try his gosh darn hardest and maybe get 5-10% or something, not nearly enough to matter. I mean, you need to own majority of an asset class to manipulate it, to price suppress it. So the fact that we all have it, Satoshi, I think that genius is lost on many, is that we were able to distribute Bitcoin to the people in a sufficient way, which protects us. Sure, Wall Street wants to buy it. Welcome to the party. Love it. Technology is helpful is because time as an asset generally is infinite time in theory, but my time is scarce and limited. And it's the promise that I'm going to die and that I can't live forever is what allows me to value.
Before we dive deeper, a quick shout out to my Discord server VVIP group. If you're into crypto opportunities and want to build passive income streams, this is the place to be. We discuss everything about making money with crypto, from strategies to insights on the latest trends. I Don't Miss Out is the perfect space to grow and connect with like-minded people.
To value my life. If I could live forever, I'd get married in 100,000 years. I'd think about having kids in 1,000,000 years. I'd go to the gym in 10 million years. I wouldn't eat the steak and the vegetables tonight. I'd eat the donuts and the pizza, and I'd focus on that in 10 billion years if time was infinite. But time's not, and I'm going to die. So I want to catch sunsets, and I want to reproduce, and I want to be a dad, and I want to be healthy, and I want to be useful. And so it's that finite promise of death that allows me to value my life. Now, if you take that and bring it to money, whether it's monetary energy with Saylor, or however you think about it, if there's infinite amounts of dollars or euros or pounds and paper, how are you supposed to value the paycheck that you get today? If they can print infinite amounts, like as if you could live forever, then nothing's valuable. And so Bitcoin as a finite promise, it actually allows me to not only value my paycheck today and the money I have now, but it's this idea of opportunity cost of, should I go spend unlimited amounts of money on marketing, hire tens of thousands of employees, launch tens of thousands of products. In a fiat world, sure, why not? Zero interest rates, unlimited venture capital, and it's all about top line growth, print. But if you introduce the promise of you can't print any more Bitcoin, the promise of death, the way we think about it at Strike is Bitcoin averages annually 63% over the last 10 years. And so we use that metric of, is what we're going to do as a business, are we going to be able to beat 63%? Because if not, it's not worth it. right? We actually have something we can measure our business against, a real cost of capital, because capital isn't this thing that governments print out the wazoo that's a worthless piece of paper. Capital is actually accretive to our shareholders. It's beneficial to store on our balance sheet. Building a big capital base is actually useful. You hear Michael Saylor talk about having $500 million of cash was just a melting ice cube. But having $500 million of Bitcoin is a strong capital base you could change the world with. And so that's our approach internally, is it's a real cost of capital. We try and measure that cost of capital, whether we take the average annual return over the last decade, over the last 5 years, over the last 1 year, and we make strategic decisions. But what that's done for us is we're not nearly as big as other startups people-wise. We stay lean people-wise. We stay focused product-wise. We only build things that we know people want. We only build things that are sustainable. We operate profitably, and we care deeply about that, and that we think we want to be net producers for the world. We want to, in Bitcoin terms, we want to do well. We want our shareholders to outperform Bitcoin by owning Strike shares. And so you got to be a net producer. You got to, have sats flow, as they say. So it's changed us entirely. But I really like, if a business was living as if they were never going to die, the business equivalent of they'd eat donuts every day. They'd never think about relationship and being useful and meaningful and taking care of themselves, right? So that's changed us. It's like meaningful life, cost of capital. Does that make sense? Was not a one-off event. I think it was very meaningful in setting the tone and direction for currency debasement. I mean, the amount of big tech layoffs. So following the fiat COVID bubble was the fastest rate hike ever in that short time frame, and that crushed a lot of these businesses. And so you saw massive layoffs throughout the world. You're still seeing them. You're seeing this almost dual economy where there's still recessionary tendencies that live with us today. And with gold, if you're going to see bullish gold in the face of a hawkish Fed, to me, that's the world is saying, we think differently now. We value differently. You wouldn't own a rock that doesn't give you any yield and doesn't produce anything unless you changed your opinion on how things worked and the confidence that you had in stuff like the S&P 500 and these growth companies. And so I think ventures changed entirely. And I think, tech and businesses. I mean, people give credit to Elon Musk, for example, on how he reorged Twitter and fired a lot of people, and he deserves credit. But I do think that was a microcosm of a larger story of people realize, wait a second, printing money for growth isn't growth, right?
Stick around for more deep dives, insights, and updates on how Bitcoin adoption evolves. Don't forget to join the VVIP Group Discord. Let's build together and ride this wave to financial freedom.